Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Renée Sattiewhite, the president and CEO of the African American Credit Union Coalition, the AACUC. Renée and I talked about a lot of things in this conversation. Particularly, we talked about her vision of the possibility of people serving other people passionately. I love that phrase. We really dove into that, what service looks like. And we really dove into the concept of how we serve different constituencies, our employees, our customers, our communities, not just our shareholders. This idea of how can credit unions and financial services in general really serve the broader set of communities, the broader set of stakeholders that are involved, the work they do to kind of make that possible, and how we can use those capabilities to move the entire industry forward to being more inclusive, more equitable. So I enjoyed this conversation. Renée is nothing if not passionate, and I thought the idea of the possibility of people serving other people passionately was a great description of her approach to, I'm sure, life, to the work she does, and I think it really comes through this episode. So please enjoy my conversation with Renée Sattiewhite. Renée, welcome to the podcast, and thanks so much for making the time to join us this morning. I appreciate it.
Jeff, thank you so much for having me. I'm excited. Let's do this.
I think this is going to be, there's a lot of energy in the room today. Even it's rainy Monday here in Pasadena, but it's a lot of energy, so I'm excited. I like to start all my interviews with just kind of asking my guests what their career path was. I think it's always fascinating to find out how people ended up where they're at and what their path was to get there. And I'd love, because you pointed out in our pre-conversation that you're not a lender, which is my typical audience, if you want to give a little background on the AACUC, who you guys are, what you do, just for the context of the audience.
Okay, I can start off that I'm not a lender, but I'm a former banker. So I spent quite a bit of time in a place that City National Bank, where I learned the wonderful gift of great service, customer service. And then I came over to, which is in credit union land, we say banks are the dark side. So I came over to the light. In 1992, working for Creditor Resources, which is was a credit insurance marketing company. And so I started with them, and I was doing training, and then I was led to this organization called the AACUC before it was formed. So the African American Credit Union Coalition became formed. They asked me to help write a grant for their internship program, and so I did that and ended up being the program manager for that. My company at the time, Sattiewhite Training Productions, did training and marketing. So all of the integral stuff about getting the organization together and the marketing and all of that, they allowed me to do that as a young person. And so that's my relationship with the organization has been over years now. And now as the president and CEO, happily, president and CEO, I have been able to work with different organizations around the industry and other leaders. What AACC does, we're a 501c3 nonprofit, and our mission is to provide advocacy and professional development for our members. And our members, although it says African American Credit Union Coalition, people think that we're exclusive. We are the most inclusive organization in the credit union system, and I'm proud about that fact, because we invite everybody to be a part of AACUC. So the industry, as we know it, is largely largely without color, if you will, our sisters and brothers of a lighter hue. And so the African American Credit Union Coalition seeks to make sure that everyone understands what African Americans bring to the table and how we can do better as a whole unit. So that's a little background on me and AACC.
Love it. Thank you for that. And, we were talking before, and you said the best question to start this interview off is talk to me about how you think about service, what service looks like to you and means to you in the context of your organization, the credit union, and the financial system broadly. How do you think about what the word service really means and conveys?
So one of the things that I always say when I'm introducing myself is I'm the possibility of people serving other people passionately. I'll say that again. I'm the possibility of people serving other people passionately. So I believe that if we all did that, we could change the planet. Imagine if you're going into a branch and you're visiting with a teller, and that teller is passionate about serving you. They're listening to you. They want to know, do you have children? Are they in school? What's going on with you? How you feeling? All of that energy, that service, that level of service, it also is a connection. So when you're looking at your staff, what do you do as a leader to connect to your staff? What's the service like? We have just come out of the pandemic and the horrific things that have happened with that, and then the social unrest. So how do you serve your employees? How do you make sure that they know that they're appreciated? So one of the things that AACC did this year around November was to do some things just for staff. And I did a staff appreciation month, making sure that every week, because my staff is mostly remote, making sure that they got something every week. I mean, stupid stuff, right? Like blankets, but they were pretty blankets. Or I personally put together candy bars with their faces on them, beautiful pictures, and thank you, and sent those out. So those kinds of things that will help, but also giving people grace, right? When they make a mistake, not to be not writing people up immediately, really going through the steps of why did you do this? What happened? What do we need to do? How do we course correct? So I think being of service to your staff in that manner, making sure you understand what's going on. Why is this person there? Because I have a superstar team. So if somebody's off, there must be a reason for it. So let's look into that. Let's be sensitive to that. And then, of course, people who have children, making sure something that I love that we were able to do at ACC during the pandemic was to make sure that our people who had young children at home spent time with their children. Like, I made it a mandate that you have to take at least 30 minutes to be with your children, just to have fun and hang out. Because we're living in such a time where it's important to make sure that you're connected. And then as a leader, service as a leader, what does that look like? Well, I now have a dream team board of directors. And in having that dream team board of directors, I want to make sure that they know that they're valued and appreciated. Well, most of them have spouses. I want to make sure that those spouses know that we appreciate them allowing their spouse to be part of what we're doing. And so I remember birthdays. One of my board of directors, he said, "Man, Renee, you're making me look bad in front of my wife, man. You're making me look bad." So, but I think it's really important that people are shown appreciation. Now, we're a 501c3, so some of the stuff that I do doesn't cost a lot of money, right? Doesn't take a lot of money to go buy, especially if you're on site, to go buy a bag of apples, wash them off, and then on Monday morning have that waiting on your staff's desk. That is something that's encouraging. But listening to people really makes sure that, and I haven't let you get a word in edgewise, but listening to people also is a surefire way of showing respect and appreciation. So that level of service, again, being there, not always being the one having to talk or waiting with your question. Well, I hope she finishes so I can ask this. I want to talk about that. No, being really intentional about being present with people.
Let me ask you brought up an interesting concept to me, which is this nature of being of service to different communities, which I feel like there's this moment in the American economy or the business climate, if you will, where people are kind of realizing, we used to think that my job as a business was to be of service to my shareholders. Maybe in the credit union space, we thought I'll be of service to my members because I'm very member oriented in the credit union space. But this idea that there are lots of stakeholders that we need to be cognizant and intentional about being of service to my community, my staff, my customers, my investors, my board. How do you think about balancing that? Because I think it's a more holistic way to think about the impact any organization has on its various stakeholders and constituencies, but it's also much more challenging as a leader to think about 20 people I have to think about and optimize for versus just like, if I make the stock price go up, I've done a good thing as a business, which is very limiting, but also at least gives you a degree of focus. How do you think about, managing those various constituencies and being of service to all those various stakeholders and groups? Because can to me seem a little overwhelming or daunting when you think about the totality of the people you really are influencing and impacting through your work.
Well, part of it can be, right? It can be people, but people can be daunting at best. So a good way to look at it is an elephant. You can only eat an elephant a bite at a time. You can't eat the whole thing at one time. So you start off in phases, right? So as I was talking about the different levels of appreciation, I made sure that my staff came first. And then, because if you take care of your staff, the staff will take care of your people. Now I'm a firm believer in that. Take care of your staff, the staff will take care of your people. whether that's your members or your board or your stakeholders, they will run through brick walls for you if you do a good job of taking care of them. When you're looking at the totality of how large this can be, you look at it, okay, well, the elephant has a nose. Well, the nose might be my stakeholders, right? And that big bottom butt on the end, that might be all of the community at large, right? So there's a left cheek and a right cheek, and we're going to keep it G-rated. But so it's all of that coming together, and then finding what resonates with that group. So that makes it easier. What resonates with that group. So it's about scalability. So what does that look like, scalability? If you're looking at a larger group, then it's in a various group, it is what's the common denominator? What's going to make everybody happy? Well, it's probably not going to be one thing. It might be, well, this greeting really resonated with someone, or a really impactful article. So it's being intentional about who you're serving and knowing, but you have to know who you're serving and what their interests are, because you don't want to spend all this time trying to do something for someone and they could care less.
I like it. Excellent. I did also want to dive into, I think this topic of service is really interesting, but I also want to dive into some of how our financial system as a whole is serving various communities. Because we had a lot of discussions, I think, when you and I first talked about the difference between equal and equitable and the kind of gaps in how the system as a whole is serving, particularly communities who are, I don't know that I love the phrase traditionally disadvantaged.
So, for instance, thank you for that question, Jeff. So, ACC, Invisant, they've changed their name, Invisant. They have a credit card. And so ACC decided to launch a credit card program. It's specifically to make sure that communities of color can have access, right? Because oftentimes, and I used to be one of those people, so that's why I thought it was kind of funny that a lending podcast wanted to talk to me. I've had really raggedy credit in the past, and but of course I know what things to do to get my credit back up. But I remember receiving some of those letters in the mail that had the 29% interest card, but you're pre-approved for $300, not understanding what that hook was, because I needed the resources, and so I said yes. Well, then I kept paying and paying and paying and paying and paying and never getting, never. $300. That $300 ended up cost me $4,500 at some point. So at the end of the day, so ACC decided to do this credit card. It's called Commitment to Change credit card, and in that we are looking at how we can drive equity. What does that look like? How can we make sure that that person has that extra $500 credit in case they need new tires, in case something comes up and they need to do something? And I'm excited about that because we can teach the difference between what's a credit card and what's a charge card. Like, what's the difference? Why is the interest rate important? And then having that financial literacy, if you will, is a good thing. So part of the equity piece to that is we have So I'm a president of a nonprofit organization, a very auspicious one at this time, and there are other professionals that I'm aware of who are in the C-suite who are just as bad shape as the teller who's not getting paid enough, right? So for the people who are in the C-suite who don't have the same resources, that's where that equity comes in. How do you make that equitable? And so one of the things that we decided to do with this credit card is to find sponsors who were willing to put up the capital to help someone have a $5,000 limit that's guaranteed, so that they can do what they need to do, and then learn how to hold their credit responsibly. But I just think that was that was a really big deal for me, because if you're an executive and you can't whip out your credit card, you're kind of less than. So I want to put people on par. So that was one of the things why we decided to do that. We were able to do that.
Interesting. Were there any barriers? I mean, I feel like one of the challenges we see in the industry is that there's this desire to expand access, but that lack of understanding. Like, access is often not as important as fairness in some metrics. There's some like random metrics of fairness not random, but some that I think often run counter to the desire to expand access to communities that don't have a strong history of credit. You go, well, we'd love to give credit cards more to this community, but we have a very conservative risk profile and they have lower credit scores, and therefore we're not going to do it. I'm curious if there were barriers in that way to getting there, because I think so often, particularly in the financial sector where there's a very low risk tolerance, particularly on the lending side, often we want to see very low defaults. We've got a very traditional credit score, income-based way of looking at risk. And then that often runs counter to this goal of expanding access in ways that are very difficult to bridge. I'm curious if you had any insights in how you bridge that, or how you were able to find people to bridge that gap, because it's hard.
We're still working on it. And one of the things that I would say is that education is key. There's a story about CUNA Mutual Group, who I think are the leaders in the DEI space here in credit union land. And they once thought that Black people didn't want to pay their bills, right? But that wasn't it. The only way you could pay your CUNA Mutual Group insurance premium was through direct debit from your account. A lot of Black people I don't want you debiting from my account, so I'm not going to give you my account number. I'm going to write a check and send it in. So managing your money differently. So when they expanded and they had someone of color in that room having that conversation, they were able to offer that information. And once that information was provided, they took another look and saw that African Americans bought more life insurance than any of their customers. And so they changed how they did business. I'm so proud of them for that. But again, that brings that equity part in there. Because if you don't know, you're making the assumption based off of your life and what you know to do.
That's such a great point about the importance of having different perspectives in the room when you're making decisions, and the misunderstandings. Most of us have a very strong bias towards our own use case. Like, I would not do something that way. So if you do something that way, if I were doing it that way, it'd be because I'm out of money, or, that's your perspective, but maybe not the perspective of that individual and their reasons. And I think that it's fascinating because you talk about the business opportunity that was missed because you didn't understand the perspective of the client. And I think that's why it's so important to get diverse perspectives in the room when you're building products and thinking about how to serve communities, because you don't understand what you don't have experience with. And that's a great example. I've not heard that one before, but that's a really good one.
Thank you.
We also talked a little bit about kind of the inequities, and I remember you had strong opinions on this, on housing and rental payments and credit, and the things we've done systemically, societally, that have not allowed people who have, to your point, like just different housing choices, buying versus renting, not have the same access to credit, not have the same credit history built up over time. Would love your thoughts on that particular topic as well, because that's I think it's one of these examples of a similar thing that's done differently that ends up having very different outcomes for people that are not expected or understood by either side, frankly, going into it.
Well, in the housing arena, it's just when you start peeling back the layers, right, of how did we get here, and white flight and gentrification and all of those things, right, that turn over communities. It's interesting to see Black neighborhoods. So I'm in Atlanta. And when I first visited, but I'm from Southern California, grew up in San Diego, and so used to being in a very salad bowl environment. I don't like to say melting pot anymore, because melting pot means everybody's going to be the same. I don't want homogeneous. I want a different flavor. So the salad bowl works for me. So right, we have a handout on the website, salad bowl. Anyway, so where we're in San Diego. Where I grew up was very diverse. When I came to Atlanta, my people were concerned about me because it's the South, and they figured that I'm a little outspoken. I like to say passionate. They think I'm a little outspoken and were concerned about me. What I found here in Georgia or Atlanta area is that you can live a really, really good life and never have to deal with a white person or never have to deal with a Black person if you don't want to. And that's interesting to me because that's not how it is in Lower California. It's just not. Everybody's everybody. Now there are different neighborhoods, right? But it's for the most part, you can't just have a whole community and not see anybody else. Okay, so having people be so different about where you live, it is hard to imagine that people still find a way to throw in the things that will make it hard for people to have a home. Why would you do that? And so it's unfortunate that things still happen. I'm encouraged though, because people like you expose stuff. People who are similar to you with the same mindset, they want to do things differently. They want to do things better. So thank you for that, right? And thank you for calling out stuff when it comes up. I appreciate that. But when it comes to making sure that lending practices are fair, I think that one of the things we have to make sure we do is that who are writing the scripts? Who are writing what you're adjudicating from? And what are you considering? So if you don't consider someone who's been renting for 15 years and they've been on time for 15 years, that's to be taken into account. And, those are the types of things that we've got to bring over to all these different algorithms.
Yeah, it's I look at that as a huge, I won't say a data issue. I mean, it's very frustrating as a lender to know that I have easy access to certain kinds of information. Like when I pull your credit file, I find out that you got a mortgage and how long you paid. And go, oh, great. I'd like to use that information. It's useful information. And they go, well, how can I find out if someone has paid their rent consistently for 15 years? You go, oh, you can't find that out. You go, oh, why not? Well, it's not as easy to access, right? Like the challenge for lenders, like that's more difficult. And I would love to see us, like lenders can bridge that gap. But systemically, like there's no reason we're not reporting those payments to credit bureaus. There's no reason we can't make it as easy to access that information as a lender, as easy to verify it as we do others. And it hits communities of color who have traditionally not owned as well. We see a similar impact for young people who are fascinatingly making a very smart decision to not use credit. All right, so they pay everything on debit. They don't want to. They've seen their parents getting credit card debt. I'm not going there. And then they go to rent an apartment or buy a car, and they go, "You've never borrowed money before. We can't lend it to you." And they go, "What do you mean? I've never been in debt before. That's a good thing, right?" And they go, "Oh, not if you want to borrow money. It's not. You need a history of having repaid stuff." They go, "Well, I paid my bills every month on time. I'm never late." But we've got this system that's stuck in a particular perspective, but we don't get great information on cell phone payments. And I think the bureaus are starting to slowly try and incorporate cell phone payments and utilities payments and rental payments into the data you have on a customer. But there's so much opportunity to improve the access and simplicity for a lender to make a smarter decision, because there's a little bit of, I haven't tried hard enough. And there's a little bit of, it's just a lot harder to get certain points of information that it shouldn't be. It should be just as easy, and they're just as valuable. I mean, a rental payment looks from a percentage of income a lot like a mortgage payment. And the fact that one's a debt, one's a not, does not seem like it should change the fact that having made payments for 20 years tells you something about the likelihood someone will make payments for the next 20 years. And yet that data is not treated the same, which kind of seems crazy to me. Then I'll ask you my closing 3 questions, which are, first off, what's the best piece of career advice you've ever gotten or given?
Don't take anything personally. It's not about you.
Oh, I love it. It was a quick answer. You were ready for that. That was like,
well, I have several, right? But it's always about me. My best friend lives in Covina, not too far from Pasadena, and I'm flying there tonight. And when I went to University of Laverne, everybody knows I will bring the conversation back to me. It's Renee's world, right? So it's not always about you. And those are some of the things that I've learned. But I've had a lot of people tell me it's not about you, Renee. Don't take it personally.
That feels like the kind of advice I have to tell my kids sometimes. It's easy but hard, or simple but hard. I think is like it's simple advice. It's not complicated, but it is not easy to do in the moment, to step out and do that. And that's some of the best advice, because it is to remind my kids all the time, like, I'm like, this is not complicated. It's not like you got to learn some crazy thing, but like doing it's hard. Do you have any advice on how you actually in that moment where you want to take something personally, how you pull yourself out from that and learn to take an abstract perspective or kind of a more objective perspective. Because I feel like I understand it, but then doing it, I feel like it's a different skill.
I had to write a Sattiewhite must do, and the Sattiewhite must do that relates to that is giving up the need to be right. And when you give up the need to be right and let other people have it their way, you normally get yours, and that really does work. And I've copywritten that. It really does work.
All right, give up the need.
Give up the need to be right.
I've been trying for years to explain this to my children and my wife about dealing with certain people in the family that just, I was like, are you winning anything by winning the argument, or are you just losing? And I'm still working on it. So if you got any tips on how to help people see that and learn it, I'd love them, because that's great life advice, not just career advice. And it is, again, simple and yet hard.
I have "Don't take it personally" written on my bathroom mirror. I have to look at it every day. I have to
remind yourself. Yeah.
Yeah.
All right. Second question: what's the best piece of advice you've gotten about the financial services industry in general, kind of like industry advice?
Pay your bills on time, and notice your interest rates so that you can avoid late payments and get the best value. And understanding what the difference between a charge card and a credit card is. That's the best advice, because when I got that first Amex card, I had no clue, and I didn't keep it very long.
I'm curious if you found ways to help. I feel like this is in that category of stuff everybody should know, but it's hard to get people to focus on and care about. If you think about from a credit union's perspective and dealing with a member, it's often, we sometimes call it here, the eating your broccoli problem. Like, you want your kids to eat your broccoli and it's good for them, but like, not necessarily think everybody's self-motivated to do. Have you found things that are effective at helping people become motivated to learn those lessons, as opposed to going, Renee, I don't want to hear any of your financial education stuff. Just give me the card that I was approved for, which is like, not that you want to be upset with them, but like, I think you got to make that learning engaging, as engaging as the Amex and the shopping you can do with it.
Absolutely. You have to be willing to do what you have to do. And one of the things that I'm a worker, so I'll work to feed my family, because my family consists of me. And so I work all the time. But I think that because people know that I've had no problem working at Starbucks for $8.05 an hour, that if I'm telling you something, it's because I've been there. And when I say I've worked at Starbucks for $8.05 an hour, it was when I was 54. I'm 62. So it wasn't that long ago, right? But I did what I needed to do because I needed the money, because at that point I was self-employed and my business had run its course. And so when you are trying to help other people, it's best when you've already been there.
That's a great story. All right, Renee, last question. What's one bold prediction for the future? It's a dangerous question after the last couple of years. I feel like this used to be a safer question, and now the world's gone crazy and bold predictions are hard. What's your one bold prediction?
That through commitment to change, credit unions will unite and eradicate racism.
Wow, that is a bold prediction. I don't know what the time frame is to bring you back and feel like if we can check in on how we're doing on that. But that's I think a very positive, bold prediction, and something a great note to end on. So thank you so much for spending the time and sharing your perspectives today. I really appreciate it, Renee. Thanks for coming.
Thanks, Jeff.